Jeff Bezos is the world's richest man. Between 2014 and 2018, his personal wealth grew by $99 billion. But in that same time, he only paid $973 million in tax, considerably less than the 37% you might expect from his income bracket. But he didn't hide liberally interpreted accounting from the government or even exploit loopholes in the US tax system. And he's not alone. Here I'm going to try and explain how some of the richest people in the world do their level best to pay as little tax on their personal income and assets as possible, and how in the US all that involves is using the tax system as it is designed. When you think about billionaires shielding their money from taxes, you might conjure the image of an oddly shaped human sending lots of zeros through friendly bank accounts to shell companies in the Cayman Islands. And for many of the super rich, outside of the US, that is pretty much what they do. In 2016, a massive data leak of 11.5 million documents from Panamanian law and corporate services firm Mossack Fonseca revealed how some of the richest people across the globe go to various lengths to not pay taxes in their countries. In 2017, the Paradise Papers, a similarly sized and unfortunately similarly named leak, this time from offshore services company Appleby, revealed even more financial wheelings and dealings of the very wealthy. Here are a few examples of what was learned from those two leaks. Hugh Grosvenor, worth $13 billion, who is also the 7th Duke of Westminster and whose title is officially His Grace. So embarrassing. Hello, I'm from the past. These teeth here, inbreeding. Hugh, His Grace, worked hard all his life, finally earning his enormous inheritance at age 26. His family set up 2 offshore companies long before he was born, one in Bermuda and one in Panama, that in turn owned companies with shares in Grosvenor International Holdings Limited, allowing the family to shield their wealth from the British taxman without breaking any laws for generations. His Grace himself avoided inheritance tax because the estate was held in a trust, meaning that the 40% inheritance tax usually due wouldn't need to be paid. Quite a win, because although it's a one-off tax and trusts are taxed every 10 years, the tax on UK trusts is only 6% and can be wicked right down through generous property relief. And Grosvenor International Holdings Limited is, mainly, a property company. France's richest man, Bernard Arnault, who owns Louis Vuitton, used a shell company in the tax haven of Jersey to skip on any property, transfer, and value-added tax when buying a mansion near London. I don't have a picture of it that I can be sure is definitely the right house, so here's a picture of Barbra Streisand's home. Isn't it nice? I hear she's very proud of it, so if you want to take a screenshot of this picture or find it yourself, share it on Facebook, share it on Instagram, maybe even send it to Babs herself, I think she would appreciate that. Aside from Louis Vuitton, Arnault also owns a company that makes big, ugly yachts. When he gets a new boat, he has a shell company owned by Louis Vuitton buy it, then he rents it from them. Of course, he's ultimately paying himself, but by doing this, he does not need to include the yacht in his French wealth tax declaration. Petro Poroshenko is one of the richest people in Ukraine, and was generally a very corrupt politician-businessman during his presidency of Ukraine. One of his election promises was that he would sell most of his assets if he won, but instead He used Mossack Fonseca to set up a shell company in the British Virgin Islands, of which he was the sole shareholder. Then, when he was elected, he gracefully transferred his own confectionery company to himself, tax-free, providing Mossack Fonseca reassurance that this was all fine, with a reference letter from a Ukrainian bank, which Poroshenko had a majority stake in. Perhaps less complicated is exile rather than legal evasion, living as a citizen of a country but not as a resident. Richard Branson, who once went to jail for tax evasion, described himself as a tax exile in 2013. He spends most of his time not in the UK, but on his private island in the Caribbean, which is part of the British Virgin Islands, which has no income tax. But Branson's personal fortune is also tied in complex trusts and offshore companies that own bits of each other, and that he has access to without necessarily having to worry about taxable income. I could go on, but I won't. Why? Journalists and casual observers asked when the Panama and Paradise Papers came out. Were so few Americans implicated? As it turns out, the non-profit news organization ProPublica have gotten their hands on some of the tax information of the 25 richest individuals in America, and, in short, by using the US tax system as intended, these individuals don't need to use shell companies or offshore accounts to shield their wealth. This chart here from ProPublica, let me just jazz it up a bit. This chart shows that there is an important disparity between income and wealth growth. Income is money that is earned through wages or salaries and is subject to income tax, but wealth is the value of everything owned: the house, the car, the Renaissance painting of a starving child, the stocks and shares. The tax for the top income tax bracket in the US is 37%, and it applies to any individual making over $500,000 of income per year. But if you're a billionaire, you only need so much liquid cash, money ready to spend. There are only so many Hot Pockets you can eat in one day, I imagine. Other brands of processed seafood are available. Capital gains tax in the US is 20% for the highest earners, and is simply the tax applied to things when they're sold. If you have a thing you bought, like property or stock, when you sell it you pay 20% tax, assuming you sold the thing for more than you acquired that thing. However, capital gains tax applies only when a thing is sold. That's an important part of this. The main strategy for avoiding income tax seems to be for the extremely rich to keep their actual incomes low. For example, a CEO might have a compensation plan that includes a relatively small salary, some dividends, and large quantities of stock. Salaries are taxed as income, dividends are taxed at low capital gains rates, and stock and property aren't taxed at all until sold. But even then, 20% is apparently too much. So, if you're determined to pay as little tax as possible, but also live a lavish lifestyle, what do? You go into debt. Yes, the super rich love debt, because you can't tax it. Take out loans on your non-taxable assets and live on it. A great example of this is investor Carl Icahn. From 2016 to 2017, Icahn paid no federal income tax. In those 2 years, he reported $544 million in income, but paid no taxes because he had outstanding loans of at least $1.2 billion, according to the tax documents from ProPublica, which were considered mortgages because they were at least partly secured by Manhattan penthouses and other properties. Mortgage interest payments can be deducted from income taxes, and apparently Icahn paid enough interest that he didn't have to pay income tax at all. In an interview with ProPublica, he had some interesting things to say about all of this. By using loans, Icahn gets to expand his property portfolio, and pays an interest only a fraction of what he would lose to income tax, which he gains nothing from paying. Mark Zuckerberg does the same thing. In 2012, he refinanced his $6 million home with a mortgage rate of only 1.05%, well below inflation. At the time, he was worth $15.6 billion. But, as finance analyst Greg McBride said, when you can borrow for free, there's no sense in tying up your own money, when you can use that money for more profitable things. This is why Jeff Bezos could pay himself $80,000 a year as CEO of Amazon. In 2007, Bezos paid zero income tax, yet his net worth increased by $3.8 billion, because Amazon's stock more than doubled. He claimed $46 million in income for the year, but offset his entire tax burden through deductions, like losses from side investments, interest paid on debts, and the mysterious other expenses. In 2011, when he was worth $18 billion, Bezos' tax return claims that he lost money because his taxable income was offset by investment losses. In fact, his reported income was so low that he claimed and received a $4,000 tax credit for his children. According to ProPublica, from 2006 to 2018, Bezos' wealth increased by $127 billion. But only $6.5 billion of that was from taxable income, and he paid an average of 1.1% true tax on this increase in his fortune. In 2020, Elon Musk used 92 million shares of Tesla, then valued at $57.7 billion, as collateral for personal loans. His current net worth is about $170 billion, and he has outstanding personal loans of more than $500 million. And by doing that, he can have $600 million in his bank account and pay that off monthly with an interest rate of a few percent, then deduct the interest from his taxes. Whereas if he sold some of his personal shares to raise the money, he'd have to pay 20% in capital gains tax on it in one go. It really is that simple. So, why does this matter? Well, I think it's easy to conflate the especially rich with the thing that made them rich. They certainly seem to invite that and benefit from it. It seems to me that's often a smokescreen. Yes, Richie Branner says, as if it's so benevolent of him. I'm a tax exile, but the companies we've built have created thousands of jobs and paid hundreds of millions in tax and will continue to do so. And that may be true, but as it turns out, some companies don't like to pay tax either. Facebook, for one, although it no doubt has enriched billions of people's lives and helped us all get along betterer, spent 10 years using its Irish subsidiary to move money around away from the taxman, and now faces a lawsuit from the IRS claiming it owes $9 billion in taxes. In the US, the corporate tax rate was reduced from 35% to 21% in 2017. However, in 2020, thanks to its own reductions, Facebook paid 12.16% effective corporate tax. Apple paid 14.4%. Amazon paid 9.4%. In fact, in 2018, Amazon had a revenue of $232 billion. It paid 0% federal income tax. In fact, it even got a tax refund of $129 million. In the US in 2018, only 6% of federal revenue was from corporate income taxes, down from 11% of the total in 2015. 8%, about $270 billion, came from excise taxes on things like tobacco and booze, the fun tax. 35% came from payroll tax, which are taxes split evenly between employer and employee, collected and sent by the employer. 51% came from individual income taxes. By the end of 2018, the 25 richest Americans were worth, together, $1.1 trillion. Their combined wealth grew by $401 billion since 2014. The personal combined federal tax bill for the top 25 in 2018 was $1.9 billion, which means that altogether they contributed 0.058% to total federal revenue. It's really the middle and upper middle class who contribute the most. It's interesting to me that the top tax rate is occupied by an enormous amount of people. In 2018, the threshold was $500,000, the same as it was in 1913. But in 1913, $500,000 could get you $13 million worth of Ukrainian confectionery. For many years, the top tax rate was for people who were very, very wealthy. Over time, the threshold has sunk, sort of obscuring the bar between the actually super rich and the merely loaded, who mostly do pay the 37% rate on income tax. Even more interesting to me is that assets are not taxed until sold, because they supposedly don't have value until they become actual money. But they do have value when you can use those assets as collateral for cheap loans, with interest rates well below inflation. How to legally evade an enormous portion of income tax when you're a billionaire? Loans. Loans that you could really pay off at any time. All to avoid paying an amount of money to the government that almost certainly means nothing to you.
It sounds like you're saying are making a big spectacle.
Me, I am the Pharaoh. I am Ozymandias. I am the Golden God. I am Jeff fucking Bezos.
Into these businesses which you have no experience in, and
Again, this leads me to wonder how much money a person needs. If Jeff Bezos paid 50% on his entire wealth, he'd still have $100 billion left. That's enough to go to the moon or whatever, isn't it? Jeff. What if you go to the moon, Jeff? What then? What then, Jeff? It won't make people love you, Jeff. Jeff. You'll never fill the hole, Jeff. Jeff.